Here's something that comes up constantly in our work with blended families. Two people, two jobs, two 401ks, and they have never once looked at those accounts together. Each person is doing something. Maybe they're even doing something reasonably smart on their own, but nobody has sat down and asked, as a household, how do these two accounts actually work together? Are we duplicating the same investments? Are we capturing every dollar of employer match available to us across both plans? Does it even make sense for both of us to be contributing the same way, or should we be doing this differently? Those are not complicated questions, but here's what can happen when they go unasked. Couples can spend years in a setup that made sense for one person at one point in time, but has never been looked at as a shared strategy. The accounts grow or don't on autopilot, and the opportunity cost adds up quickly. I'm Jerry Doherty. Today, April and I are walking you through how to coordinate your 401ks as a team, not as two separate people who happen to share a mortgage. If you have two incomes, two employers, and two retirement accounts, this one's for you.
Jerry, when you look at blended couples where both spouses are working and contributing to separate 401ks, what's the most common mistake you see?
What's the most common 401k mistake blended couples make when both are working? They treat their retirement accounts as two completely independent plans that just happen to belong to two people in the same household. Here's the pattern we see most often. Each person is contributing whatever percentage they set at their original enrollment. Maybe that's 6%, because that's what the form suggested. Neither has adjusted for a salary change, a life change, or the fact that they are now in completely different financial households than when they first signed up for that 401k. And the employer match piece is where it really stings. Blended couples are often managing competing financial obligations, child support, expenses from two households, kids from previous relationships. The pattern we observe is that people contribute just enough to capture the match, and then they stop. They're not looking across both plans and asking, are we capturing every available match dollar between the two of us? One thing worth knowing, many 401k plans today offer an automatic annual increase feature, sometimes called auto escalation. You set it once, and your contribution percentage goes up by 1% each year automatically. It's barely noticeable in a paycheck, and over time, it does a lot of heavy lifting for you. If your plan has that feature and you haven't turned it on, that's worth a look. Let's talk about a question a lot of blended couples have never actually discussed. Roth versus traditional. When you have two different incomes in one household, how do you think about which account type each person should be contributing to?
How do blended couples think about Roth versus traditional contributions when they have different incomes? This is actually one of the areas where having two separate accounts can give you a planning advantage. If you're using them with some intention rather than just defaulting to whatever you enrolled with. The basic principle: Roth contributions are made after tax. So you pay taxes now and the money grows tax free. Traditional contributions are pre tax. You reduce your taxable income today and pay taxes when you withdraw in retirement. The question is always, where do you expect your tax rate to be in the future compared to right now? In a blended household with two incomes at different levels, there's something worth thinking through. Because 401k withholding is calculated separately on each paycheck. The cash flow impact of a traditional contribution is different depending on your income level. And how your combined income stacks up against current tax brackets is a real factor in which approach might work better for each of you. This is genuinely one of those areas where the right answer depends on your specific situation, your combined income, where you are in your careers, and what you expect the future to look like. Most 401k plans today are self service. You can log into your account portal and review or change your contribution type anytime. But before you make a change like this, it's worth talking through with a financial professional or CPA who can look at your differences and how you structure this can add up over a long time horizon. What about couples who feel they cannot contribute more? The reality of a blended family is that there are more financial obligations pulling on each paycheck: child support, duplicate expenses, kids in two households. How do you prioritize retirement savings when you are already stretched?
What do you do about retirement savings when a blended family's obligations make it feel impossible to contribute more? The financial pressure is real. Blended families do carry more pulls on their income than traditional households. The pattern we see is that couples end up in one of two places. They try to do everything at once and burn out, or they push retirement contributions off entirely because it all feels like too much. The couples who navigate this well tend to prioritize in a specific order. Step one is always the employer match on both plans. Capture the full match before anything else. The employer match is one of the most favorable returns available to you anywhere in your financial life. A dollar you contribute that gets matched is worth $2 before it earns a single cent. When that goes uncaptured, you're leaving compound growth behind for a decade or more. Step two is a basic emergency fund, so a car repair or unexpected bill doesn't become a retirement account withdrawal. Step three is incremental increases over time. Most plan portals let you adjust your contribution percentage directly. No phone calls, just log in and make the change. The strategy that works best isn't a dramatic jump from 6 to 15%, for example. It's going from 6 to 7 this year, 7 to 8 next year. That kind of slow ramp up is barely noticeable in a paycheck, and over a 15-year window, the difference in retirement outcomes is significant. The trap we see most often is letting "I can't do everything right now" become "I'll deal with it later." Later has a cost. The math on delay is unforgiving, especially in the back half of your career. One more topic that's especially relevant for our audience. Many of the blended families we work with include people in their 50s, often in second marriages, sometimes after a period of disrupted savings. April, what should they know about catch-up contributions?
What should people in their 50s know about catch up contributions in a 401k? Once you turn 50, the IRS allows you to contribute an additional amount above the standard annual limit. It's specifically designed for people in the final stretch of their working years who want to accelerate their savings. For blended families, this is particularly worth understanding. Many people entering second marriages are in their 50s. There may have been years of elevated expenses, a period after divorce where retirement savings slowed down, or simply a season of life where maximizing contributions wasn't possible. Catch up contributions exist because the IRS recognizes that life doesn't always go in a straight line. The practical step here is to understand what's available to you. Most plan platforms have this information in your account portal, and it's worth looking at your current elections to see whether you're taking advantage of it. If you're not sure how this fits into your overall strategy, that's a conversation worth having, whether that's with your plan's resources, a benefits administrator, or a financial professional you work with. The most common response when we bring this up: "I didn't know I could do that." Now you do. And knowing is the first step.
If today's conversation made you realize you haven't looked at your retirement accounts as a coordinated household strategy in a while, you're not alone. The most common thing we hear is that couples said it once and never revisited it because nobody told them they should. A review of your combined contribution rates, your Roth versus traditional mix, and whether you're capturing the full employer match across both plans can be one of the most valuable conversations you have this year. If you'd like to walk through that with someone who works specifically with blended families, we'd love to connect. The link to schedule is in the description below. And if this was helpful, passing it along to someone navigating a blended family is the highest compliment you can give us. We'll see you in the next one.